Good morning, Mark Soderberg with ADM Investor Services with your ag market outlook for Tuesday, January the 21st. Well, sharply higher trade across the ag space overnight is for the most part holding into the morning. Corn right now is 3 to 4 higher in old crop. New crop is steady to slightly lower. Soybean prices are near session highs, up 18 to 20 cents. Gains on the new crop are about half that amount. In the products, meal is up $5. Bean oil is steady, and wheat is holding with gains of about 6 to 8 cents. Following yesterday's inauguration, President Trump has so far not signed off on a slew of new trade tariffs with key trading partners as threatened during the campaign, however, maintaining that his administration would review current trade deals to ensure that other countries are adhering to them. The U.S. dollar did open sharply lower overnight, however, has trimmed those losses as we head into the morning hours. Scattered rains fell over much of the drier regions of Argentina over the extended holiday weekend, with the exception being central and southern areas of Buenos Aires. As rains have brought modest relief for developing crops, much more is needed. Above normal temperatures will gradually turn milder here by the end of the week, with the next best meaningful chances for moisture. Southern Brazil is starting to see a pickup in rain activity as well, as desperately needed following the recent hot, dry stretch. A wetter than normal pattern across the central and northern growing regions will also gradually diminish, allowing the crops to mature. Harvest delays have begun to mount, however, with less than 2% of the soybean crop harvested as of late last week. Yesterday's Committee of Traders report did show a large amount of buying by both money managers and index funds across the ag space in the week ended last Tuesday. The money managers' length in the ag space, including livestock, has now swelled to an 18-month high at over 375,000 contracts. While the major index fund was reallocating positions last week, this resulted in the largest amount of buying in the ag space in over a decade. In corn last week, money managers, they tacked on nearly 39,000 contracts to their long position, while index funds added 40,000 contracts following Friday's trade. We're guessing the money manager long position in corn now is out to well over 300,000 contracts. Money managers were large buyers in both beans and oil last week, while being light sellers in the meal. March corn did jump out to a fresh 8-month high overnight. Not much resistance really now into the high from last May at 508. Fears of delays in planting the second corn crop in Brazil as the bean harvest lags are primarily, I think, what are driving prices right now. We'll see if March beans can retest last week's high at 1064, hovering very close to 1055 as I speak. Continued delays with the Brazilian harvest could open a window for more demand here of U.S. soybeans. Still no word from the Trump administration on the future of Z45. Near-term support for March oil rests at about 45 cents with resistance at 47. Resistance for March meal comes in at $310 a ton. Bitter cold across much of the nation's midsection, along with limited snow cover for much of the western plains, is likely cause some damage to the U.S. winter wheat crop. However, it'll be weeks before its impact on yield can be fully determined. Wire services this morning are also reporting that Egypt's new grain buying group has reportedly bought a large volume of wheat from Russia for late January into February shipment. We'll share pricing and more precise volume figures when available. So thank you for listening, everyone. I hope you have a great start to your Tuesday.